What's up, weirdos? What's going on, guys? Another day, another dollar. Let's go. Let's get it. How's everybody doing today? Let's get the Bitcoin chart up on the screen. Get into the chat momentarily. It's a good day to have a good day, guys. It's a good day to have a good day. How the hell are you? Feeling good, feeling great. Bitcoin sitting at 111,000 right now. Seem to be trying to hold support right around that $110,500 mark. We'll see what happens, man. We'll see what happens, but so far so good. A lot of people calling for a dip down to about $100,000. Let's put a little golden pocket down there, shall we? A little something, something. Right? A little something for the homies. Right about there. People are calling for a dip all the way down there to $100,000. Do I think that's going to happen? No, I really don't. I really don't. I feel like we're seeing so much of a call for that to happen that it's just, the opposite's going to happen. We're seeing the shorts are really starting to pile up. If we go have a look at the liquidation levels, let's have a brief look at that on the monthly time frame. See, guys, what's happening right now is everyone's being convinced that the market's going lower. We're seeing articles about it. We're seeing a lot of content about it, right? So on the daily time frame, if Bitcoin decides to make a move, just back up to $115,000, $2.5 billion worth of shorts gets liquidated. But if we go to the monthly, look at all of these shorts, guys. Look at this. If Bitcoin really goes on a tear up to 127,000, $18 billion worth of shorts gets liquidated. I think what's happening right now is market makers are allowing these shorts to pile on. They want it to be over like 20 billion. What happened with the longs was $19 billion worth of longs got liquidated. And we are getting dangerously close on the short side to the same level, right? 18 billion plus. You're looking at a very, very strong possibility of a massive short squeeze, just like we saw that massive long squeeze, right? Don't be fooled, guys. Do not be fooled. Even if we did drop down lower, I think it's a trap. I think it's a trap to make people pile on their short positions so that the exchanges can liquidate every single one of them. So do not be fooled. Do not be manipulated, my friends. Let's get into the super chats. Big Kev says, I'm here to learn. I trust your knowledge, experience, and your leadership. I'm glad I do not need to navigate the crypto world without your guidance and leadership. Thank you for your time always. Hey, Kev, absolutely, brother. Absolutely, man. I'm here to help, man. I'm here to help. Shay Boy, where you been, man? Just want to say thanks for all you do. Good to see you, brother. Good to see you. Thanks for popping in. My dude, Andy. What's up, buddy? Sending man hugs. Big guy. P.S. Don't tell Spencer you'll get jealous. Nice. Yep. Well, I mean, if I told Spencer, there'd be some sort of a long story short involved, right? Kev, what's up, man? This is the time to be bullish. Yes, exactly. Exactly. Not financial advice, guys, but when things are down in red, I've told you guys 100 times. You guys know this by now. Millionaires are made when things are red, sideways, boring, and down. They are not made on green days, right? The people who make money in this space are the people who take advantage of the red, boring, sideways action. Plain and simple. Those are the people who succeed. Full stop, right? William, what's up, buddy? H. Barbarina in his house. What's up, buddy? Isaac, Lickitung in the house. What's going on, my guy? Good to see you. Overcome is hanging with us. Joy, hey, Robin, Patreon family, have a great day. Hit the likes. Yes. Cody, what's up, buddy? I got to go check my mailbox there today, Cody, see if anything showed up, brother. Matt, what's up, my guy? All I know is I will continue to DCA, not bearish at all. Yeah, me too. Me too. Because really, what else are you going to do, right? What else are you going to do? Adam Warner, got my notebook ready. Let's go. There you go, man. I love the positivity, brother. Blessings, John. Good to see you. Super fantastic. Jared, good morning, fam. Just remembered your number one friend in crypto, risk management. Yes, if you've taught me anything, Rob, it's patience and not to expect anything. Happy Wednesday, nerds. There you go, brother. Crypto J505, what's going on, man? Guys, as always, make sure you hit the like and subscribe. We got 193 people watching. We have 65 likes. Let's get those likes up to the big 100, guys. Let's get to 100. What else do we have? Big C. I'm scared. Where's my pillow? J Money, Bulbasaur in the house. What's happening, Mario? It's a me, Mario. Good afternoon, Senor Future. God bless you, brother. Also, remember, man made the money. Money never made the man. LL Cool J, absolutely. Don't call it a comeback. We've been here for years. Brandon, Christ is King. Amen to that, my friend. Yes, he is. Big C says, Zebek is right there. I can feel it any day now. It's exciting. We need that house hippo pump, Rob. Yes, maybe we'll get a house hippo pump going a little bit later in the stream. Zebek Army is here. There you go. Matt Adams says, let's get weird. Hit the like button. Brandon, yes, Christ is King. Absolutely. There she is, the one and only, the Gamma Goddess. She says, let's get this money. Amen. I got a cough. Oh. Whew. Beebs, my dude. What's happening, brother? Brandon says, I'm working on it, Beebs. There you go. Crypto Future Millionaires. There you go. Paul, good to see you, my friend. Good to see you. Dave, what's up, man? Let's get this money, baby. Amen to that. AF says, happy Wednesday, brother. Looks like another DCA opportunity. Always thank you for your effort, brother, and happy to be in the Patreon community. There you go. There you go. This is supposed to be October. Where's October? Have you looked under the bed? Have you tried unplugging it and plugging it back in? Yes. Oh man. Jesse and James, what's going on? Bearish sentiments before blast off. Yes. The more bearish the sentiment is in the space, the more bullish I become, and vice versa, guys. Rob Zavan, thank you. Robbie, thank you so much. Monzo. Strawberry Dragons, here to be with my bullish leader. And Community DH says that the liquidity from all those shorts, nobody will lose their minds like they did when the longs were crushed. Yeah, exactly. Matt says, no one can make you feel inferior without your consent. Glad to hear, Rob, that you're getting of those emotional vampires. We appreciate you. Hey, absolutely, man. Yeah, we're just kicking and we're just ignoring the negativity now. Over the top, what's going on? Jake the Snake says, Spencer, so to make a short story long. Kiz, what's up, buddy? Good to see you, man. A guy says, can't be thinking like a bear at this point, only bull thoughts from here on out. There you go. Exactly, DH. If the shorts get liquidated, nobody will freak out like they did. Yes, exactly. Exactly. Carlos, what's up, buddy? Yusuf, do you think we can run from here and top within Q4? I think Bitcoin can, but alts are probably going to run into late January, maybe mid-February. But I still think Bitcoin tops this year, yes. Big John, what's going on, man? Jamie, what's happening? AF says DCA to Cookie and Ondo, and very happy for it. We'll be with you, brother, and always trust your judgment. Amen to that. Two great picks. Matt, what do we got, brother? No one can make you feel inferior. Absolutely, brother. We covered that, but thank you so much, my friend. Absolutely. Oh, we're busted. We're talking smack. Spencer says, tell Andy I don't hug men in dresses. Check the Binance outflow right now. The Binance outflows, are they bad right now? Let me check. Hang on a second. Are you talking about Bitcoin or what? Let's find out. Let's find out, brother man. Uh, 4,000 Bitcoin. I don't know how up to date these are, but the numbers I have, but 4,000 Bitcoin or $454 million withdrawn from Binance in Bitcoin over the last 24 hours. And as for Ethereum, 10,000 Ethereum or $41 million worth has been withdrawn. 506 million net outflows over the last month. Crazy. That's bullish though, man. Bullish, right? That's what we want to see. Okay, Telly, what's going on? Don't let these manipulators trick you out of your position. Thanks, Rob, for all you do. Amen to that. Amen to that. Crash not over. Maybe not, but we will be ready, man. We will be ready. Zebek had a nice run. Yeah, Forda is still up like 27% too, though. Don't sleep on Forda. Okay, so for the most part, guys, we are caught up in the chat. Let's get into the news, man. Let's see what's going on out there in the wide world. Tell you what the helly. Nice. All right, let's see what's going on out there, guys. Speaking of segueing from Spencer's comments about the outflows, Ethereum primed for a rally with a 40% supply lockup. Analyst Crypto Gucci said Ethereum has nowhere to go but up, with 40% of the supply now out of circulation amid record institutional demand. Ethereum has never experienced a market cycle with all these supply vacuums activated at once, creating unprecedented conditions for price appreciation. Digital asset treasuries did not exist in the last market cycle, but have now amassed 5.9 million Ethereum, worth around 24 million, equivalent to 4.9% of the total supply. According to Strategic ETH Reserve, these entities will hold the asset for long-term yields, removing substantial supply from active trading. One little caveat, guys, is that it is not true that there was no crypto treasuries in the 2021 cycle. In fact, this whole putting crypto on the balance sheet stuff started with Elon Musk and Tesla back in the 2020-2021 bull run. So treasuries actually did exist. They started in the last cycle. They're not new to this cycle, despite a lot of content creators telling you that we've never seen, companies putting crypto on their balance sheets. That's not true. They were doing it in the last cycle as well. So, in fact, I remember countless spaces and live streams between like Jack Dorsey, Elon Musk, and what's her name, Kathy Wood, talking about buying as much Bitcoin and stuff as they could in the last cycle. So it's not true that these institutions and these big entities are new to crypto in this cycle. They were around last time, right? So yeah, whenever someone says to you, this time's different because of that, no, that started last time. That's not new. US-based spot Ethereum exchange traded funds have scooped up 6.84 million tokens worth $28 million, equivalent to 5.6% of the total supply. This accumulation occurred despite staking not being approved for ETFs, suggesting even longer demand potential once staking functionality becomes available. Staking represents the largest supply vacuum, with 35.7 million Ethereum staked, worth approximately $146 billion and accounting for almost 30% of the entire supply. Most of this is liquid due to the length of the exit queue, which currently stands at 40 days for validators wanting to withdraw their tokens. Crypto Gucci stated that Ethereum has entered this cycle with a record institutional demand and at the smallest liquid float in its history. When demand meets the shrinking supply like this, price does not go up, but goes nuclear. The analyst wrote on Tuesday, public companies tracked by ARK Investments are collectively holding over 12% of total Ethereum supply. Among them, Tom Lee's BitMine, which purchased $834 million worth of tokens earlier this week and now holds $12.52 billion in Ethereum, more than halfway towards the target of controlling 5% of the total circulating supply. Entrepreneur Ted Pillows predicted a fair value of $8,000 to $10,000 for Ethereum this cycle. He wrote that with institutions bidding on ETF staking approvals, he thinks Ethereum will rally hard and catch up with M2 supply in Q4. The Ethereum supply is marginally inflationary at the moment, but has only increased by 0.5% since the merge in 2022, when it transitioned from proof of work to proof of stake. According to Ultrasound Money, compared to this, the Bitcoin supply has increased by 4% over the same period. Another factor that could become a fourth supply vacuum would be if nation states start stockpiling Ethereum for their crypto strategic reserves. This week, the Kingdom of Bhutan announced that it is building on Ethereum by integrating its national ID system on the blockchain, though it does not currently hold any Ethereum. Very, very interesting. We got a super chat to get to here from my man McNerney. Hey Rob, love the new mindset and outlook on the new Patreon video. Your energy is way too valuable for all the Debbie Downers. Appreciate you, brother. Hey, I appreciate you too. Thank you so much. That's absolutely it, man. We are going. We're going to have some fun. We're going to have some laughs. We're going to make some money, baby. That's what we do. Let's keep this rolling, though. Let's keep this rolling. Let's have a look at NFTs, guys. NFTs were massive in the last cycle, but this time around, NFT market finds its footing after historic crash. Following the weekend of extreme volatility, data now suggests that confidence, though fragile, is slowly returning to digital collectibles. The collapse was swift. On Friday, NFT valuations across the blockchain plummeted roughly $1.2 billion as traders rushed to liquidate holdings amid a market-wide crash. Sissy bears. By Saturday, total capitalization had fallen near $5 billion, but within 48 hours, prices began to rebound, with the market climbing back above $5.4 billion by Monday morning, a modest recovery that hinted at renewed demand. The downturn underscored how closely NFTs remain tied to crypto market sentiment. When liquidity in Bitcoin and Ethereum vanishes, non-fungible assets tend to be the first casualty. Market makers and collectors pulled back simultaneously, leaving floor prices for even top-tier collectibles exposed to deep markdowns. Despite the rebound in total capitalization, most leading products remain underwater. Bored Ape Yacht Club and Pudgy Penguins have both suffered double-digit weekly losses, while CryptoPunks, long considered the NFT market's benchmark, has slipped about 8%. Others, like Fidenza and Infinex patrons, also logged notable declines. A few collectibles, however, showed tentative strength. The Mutants Ape Yacht Club, and Hyperliquid's Hyper series recorded small daily gains, suggesting that selective buying is returning to the space. Still, sentiment remains cautious, with traders avoiding aggressive bids after last week's crashes. The chaos originated far beyond NFTs. Bitcoin futures briefly collapsed to 102,000 on Binance following Trump's announcement of a 100% tariff on Chinese imports, sparking panic in global risk markets. The fallout triggered over $20 billion in liquidations across the crypto exchanges, one of the largest single-day events since the FTX implosion. The total crypto market shed nearly $500 billion in value before rebounding to around $4 trillion by Monday. Yet, despite the turmoil, institutional products held steady. CoinShares reported over $3 billion in inflows to crypto-linked exchange-traded products last week, signaling that professional investors may still view the crash as an opportunity rather than an exit point. For NFTs, the episode serves as a reminder that recovery will depend on broader crypto stability, while the weekend bounce shows traders aren't abandoning the sector. It also reveals just how quickly sentiment can turn when the market foundation shakes. Exactly. That's why you got to do things strategically, guys, and not be such an emotional sissy bear. Let's segue over to Squawk Box and see what's going on, guys. Give my voice a little bit of a rest. The phase shift associated with the AI boom. Is it a bubble?
Are super excited to get to our next guest for a wide-ranging conversation on the markets, AI, bubble fears, China, venture capital, policy, and so much more. He's got his glasses, the famous red glasses. Brad Gerstner's here, founder and CEO of Altimeter Capital, of course, a leading tech investment firm with notable investments in Meta, NVIDIA, Snowflake, Uber, Amazon, Microsoft, and others. Brad, welcome.
It's great to be here.
You're in town for the big Robinhood conference. Thank you for joining us.
Amazing organization. You know, I live in, obviously, Silicon Valley, but what Paul Tudor Jones and that group has done to relieve poverty over 40 years in New York, had an event last night, over $500 million announced for their new endowment. So it's great. They have an investment conference today. I look forward to talking on it.
So here's the big question. I imagine the word bubble is going to be raised at this conference multiple times, if it hasn't already last night. Are we in one? If we are, where are we?
You mean AI or
AI, some kind of economic bubble, market bubble? I don't know what you think it is. And I will say, you mentioned Paul Tudor Jones. He was on our air about a week and a half ago now, and he said he thought we were in some kind of bubble, and he put us on a comparable basis. He thought of October of 1999, which was an interesting moment because the market still had 40% to go.
Right. That's right. Well, first, you rarely have a bubble when the hottest book in New York is about a stock market crash, and everybody who comes on the show talks about a bubble.
It's a bubble and bubbles.
Howard Marks said, you know, it's too early because everybody's talking about a bubble. If you look at multiples as an example, you called out Bernstein yesterday. I thought was great. He was talking about 50 times trailing PE for Nvidia.
Yeah.
It's 25 to 30 times on a forward PE. That's not the stuff that bubbles are generally made of. But certainly, the further and further you go out on the risk curve, Andrew, you will find things that make you scratch your head. You say, I wouldn't have done that deal. And there are going to be meme stocks that certainly, you know, have no revenue, Becky, and, you know, in the quantum space or whatever, where you say that valuation doesn't make any sense. But we have this all the time. The bigger question is this. Is the phase shift associated with AI? Is the transformation of all computing with now computer-assisted intelligence, is it as big as the internet? And I would argue that it's as big as the internet. And if you spend all your time hand-wringing, like many people did in 2001 and 2002 about the internet, saying, I told you so, they missed the next 20 years of compounding in Amazon, in Google, and all these big winners.
By the way, I would agree with you in that I think AI is going to change the world. It's a generational shift for all of us. The question is, could there be a hiccup along the way? And what does that hiccup look like in terms of right now, when you say to yourself, the upside in this marketplace today versus the downside? We had an analyst on earlier this morning who said, you know what? It's going to be hard to reach materially higher numbers right now, but she kind of thought, you know, could the market be off 5 or 10%? She said that didn't seem totally unreasonable to her.
We've had two 25% drawdowns in NVIDIA this year.
Right.
Remember the DeepSeek moment? Stock was down 25%. And then on the tariff moment, the stock got down to $92 a share. It's at 180 today. So volatility is the name of the game for two reasons. Number one, we have a president that's trying to reset global trade policy, national industrial policy in the middle of a super cycle. So that's just a lot of uncertainty. So I think that's healthy in a market, right? It's not straight up and to the right. We've had a lot of drawdowns this year. And if you look at these stocks and you say to me, does it make sense that NVIDIA is up 35%, given that their top line has grown way faster than 50%? The answer is yes. It's cheaper today than when the stock was $200 a share.
But here's the real trick, and that is, we can tell the difference between some crazy meme stock or a new crypto junk coin that we've never heard of, and Nvidia, right? But how do you, as an investor, find those gradations in the middle? How do you determine what's real, what's not, when it's not so extreme?
I think it's a great question, Becky. If you look at how on the venture capital side of things, you see this barbell approach, and we're following it as well, right? We're really large investors in OpenAI, clear breakout market winners. On the other hand, we're investing in, very small companies where we're buying 10 to 20% of the company. In the middle are these inflection growth assets, really high valuations, but haven't yet proven that they're the multi-year compounder. There are over 1,000 of those in Silicon Valley, over $1 billion that are trying to raise capital right now. That's where I think you're going to see a lot of the chop, a lot of the washing out. You'll also see that in the public markets, right? This is a moment of, peak creative destruction, right? There are winners and there are losers, and that's why we see the volatility. How can Oracle, Joe, be up 25% on earnings? It's a head scratcher when they announce these deals because they're gaining hundreds of billions of market cap in a single morning. You only have that when you have this level of uncertainty about the path forward.
Okay, so let's talk about the certainty that you think you have about the path forward.
Yeah.
So you would say, who are going to be the ultimate winners in all this right now?
Yeah. Well, I mean, I think on the
NVIDIA, you think, is obviously a winner. Would you touch an AMD? Would you touch a Broadcom?
Sure, we own Broadcom, we've owned AMD. What I would say is if you go back to 2022, and I showed this graphic on the podcast recently, in 2022, right, only 2.5 years ago, Andrew, AMD and NVIDIA had the same revenue. Yeah. This year, AMD will do just over $30 billion, and NVIDIA will do $225 billion. 100% of the incremental market share to AI basically has gone to NVIDIA.
Right.
AMD missed the wave. But to Lisa's credit, She raised her hand and said, I'm betting the farm. I'm going to give 10% of my company to OpenAI, and I'm going to bet that the MI450 is going to work and it's going to be competitive with NVIDIA. That's not exactly the position of strength that you want to be coming at it, but it's also a recognition. Lisa said we're in year 2 of a 10-year super cycle to build out the compute in America. If you're not on the AI wave, then you're not going to participate in all that upside.
When you think about the big LLMs, OpenAI at least clearly seems like they're going to be a winner. Google, I don't know where you think Anthropic lands in all of this. I know you own Meta.
Yep.
They're trying to play this game, but playing in an open source way. Does that work?
Yeah, so let's bucket it into consumer and enterprise. I think that's the easiest way. On the consumer side, I've invested in 3 or 4 super cycles now, the internet super cycle, the social, mobile, et cetera. The winner tends to be winner take most. Right? So Google had a lot of competitors, 20 competitors in search. They all have pretty good technologies, but Google consumed 98% of all the upside ever associated with search. Meta in the case of social, Apple obviously with the App Store. I think ChatGPT at well over 1.5 billion monthly users, over 800 million weekly users, and what most people don't talk about is the engagement. Engagement is going up. So if you look at the cohorts under those numbers, they're extraordinary. And so I think they're breakaway now in consumer. Can Google catch them? I think it's very challenging. Can Meta catch them? I think challenging. Will they build good businesses around AI? Yes. Right? These are money machines, the best businesses in the history of capitalism. They're going nowhere. I'm impressed by what Sundar is doing. I'm also impressed by what Alexander Wang and the team at Meta are doing. But they know how hard it's going to be to catch up in consumer. On the enterprise side, this is going to be a free-for-all. Nobody's going away. Microsoft, Amazon, Google, Meta, they're all, Anthropic is probably one of the market leaders in enterprise today, certainly with Claude Code and the work they're doing with Cursor. So there are going to be a lot of players that are left in the game, but those that we just mentioned, those are going to be in the hunt. Think about the 50 companies that come after them. It's getting harder and harder to raise funding if you're the next foundation model, right? If you're the next application to do coding. I think the market's sorting itself out pretty quickly into the market leader.
Too many people calling for a bubble, which tells me there's no bubble coming. Not anytime soon, guys. Not anytime soon. Okay, what else do we have? Crypto prices today. Outflows soar. Gold, silver hit record highs. Now, the reason I wanted to just kind of highlight this, guys, is that I'm going to show you the gold chart, okay? Let's look at gold this year, just in 2025. Look at that chart. That's just that blue box is just this year. That's the growth of gold, okay? Now, what this tells me is that every day that goes by from this point forward when it comes to gold and silver is a day that the risk gets higher and higher, that people holding it are going to, suffer a crash in it, right? And they know that. Hang on. Wise investors know that. If you've been in gold this whole time and you've ridden it all the way up to this point, most investors know it's about time for this to have a big correction, right? So where do you think that capital is going to flow out of? Not just in gold, but if we go and we look at silver as well, right? Let's look at silver. Same thing, guys. Look at silver just this year. 2025, 2024, December, here we go. Just this year, that's silver, right? Gold and silver both. Pretty soon, people are going to start to rotate that capital into higher risk assets, especially with more rate cuts coming. You're going to start to see that capital flow out of gold and silver, and you're going to see it start to flow into Bitcoin and then trickle down into the altcoins, right? This is coming. What you're seeing right now in gold and silver is coming to the crypto space. You're either going to wait for it or you're not. But those who miss it are going to be very, very angry that they did, right? Talk about vegan Bitcoin holders the other day. Pure torture. I talked to a vegan, yeah. So just wait it out, guys, right? Not financial advice, but I've been around a long time, man. I've been around a long time, and I've seen a lot of people lose because of hasty, emotional decisions. Binance's internal pricing system blamed for $19 billion worth of liquidation meltdowns. Fresh analysis from Cointelegraph Research and Arena Labs has revealed new details about the October 10th crypto market crash, now confirmed as one of the largest liquidation events in the digital asset history, wiping out more than $19 billion in leveraged positions across major exchanges. According to the report, the crisis was triggered when Binance's internal pricing mechanism for key collateral assets, including USDE and BNSOL and wrapped BETH, failed to reflect accurate external market values. Instead of relying on Oracle-based pricing feeds, the exchange used its own internal valuations, creating a severe mispricing event that rippled across derivatives markets. Order books data from Arena Labs shows a 97% loss of market depth in the USDE-USDT trading pair, sparking a chain reaction of forced liquidations. The stablecoin's price fell to 68 cents, breaking its dollar peg, triggering a liquidation cascade as traders' margins positions evaporated within minutes. The report identified four distinct stages of the meltdown: initial liquidity loss, equilibrium collapse, liquidation cascade, and capitulation. By the time the dust settled, with long and short positions had been flushed out, with cascading liquidations amplifying volatility across altcoin markets. Researchers warn that Binance's decision to depend on internal pricing rather than external oracles created the feedback loop of inaccurate collateral valuation. This failure, they argue, undermines the credibility of the exchange's risk management system and exposes broader vulnerabilities in synthetic dollar and wrapped market assets. I want to point something out here, guys. This is why the importance of holding projects like Chainlink and Pith in your portfolio are a very, very wise idea, not financial advice. But look what happens. Projects like Pith and Chainlink are the oracles that control these kinds of things. But Binance decided, in their infinite wisdom, not to use a professional oracle company like Chainlink or Pith for pricing. They decided to build their own internal mechanism, and as a result, $20 billion worth of liquidations took place. Accountability, zero, right? But I digress. That is why it is important, in my opinion, to have projects like Chainlink and Pith in your portfolio, because they are the glue that holds this space together. Now you know what I mean when I say that, right? The event has already sparked renewed debate among institutional traders and regulators about exchange transparency and resilience of synthetic assets. Analysts believe the collapse will accelerate calls for independent price feeds and stricter governance for stablecoin-backed collateral systems. While liquidity has since returned to normal levels, the October 10th implosion is being described as a turning point. A stark reminder that even the world's largest exchange remains susceptible to structural failures when internal controls override market transparency. Exactly. Chainlink, Pith, part of my portfolio. I'm not sleeping on those super fantastic projects, guys. All right, let's segue back over. Gain says, I think it could turn around by next week. Yeah, I agree. All right, so expect to see deeper disproportionate amount of pricing on toys this holiday season as we move into the holiday season.
Survey from Deloitte, 57% of consumers said that they expect the economy to weaken in the year ahead. And 77% said that they expect higher prices on holiday items. On average, consumers plan to spend 10% less than last year during the holidays. And joining us right now to talk retail is Michael Lasser. He's UBS equity research analyst. And Michael, again, what you ask people and what they do are not always one and the same. But the idea that people think they're going to spend 10% less and that the prices for everything are going to be up, does that read true to you?
It reads true that what people say they're going to do and what they actually do is very different. So I agree with you in that regard. And the second question of, are prices going to be up to that degree? Absolutely. And not only will prices be up to that degree, but the items that we tend to focus on during the holiday season, like toys, will see a disproportionate amount of pricing. So it's going to be an interesting holiday season, but nonetheless, I do think it's going to be a pretty successful one for retailers, given all the factors that we know.
Meaning the retailers are not going to stock up with as much inventory, meaning the retailers are not going to take price discounts so that their margins will be okay, or meaning that people are going to spend a lot more than they're thinking they're going to spend?
I think it's all of the above. I think the consumer's going to come out and spend the holiday. There tends to be a high correlation between back to school and holiday spending. These two seasons are quite close. So that's a good leading indicator. And the back to school season was pretty good. People have jobs, albeit the labor market's not as strong as it was. And the consumer has shown a propensity to want to come out and celebrate events. Plus, there are some hot products in demand, things like the Nintendo Switch, collectibles. The Labubu is going to be a hot item for the holiday season. And so, on top of all that, I do think that retailers have ordered pretty conservatively, given all the tariffs and the other unknowns. That should lead to decent margins. So that's a good combination for the holiday season.
So we have just been talking to Leslie about the major bank earnings. 5 of the big banks already out in the last few days, and they have shown a pretty strong economic backdrop, not just from the companies that are continuing to do things like M&A activity, but a pretty strong backdrop from what we see from the consumer to this point, too. Where's the disconnect between what people seem to be doing in terms of spending, what their bank accounts look like, and this kind of gloomy outlook?
Yeah, there are a lot of cross currents. But first, keep in mind that 50% of consumer spending is driven by the top 10% of households by income. So that's a very important demographic, and they're feeling better because of their net worth is a little higher. On the other hand, the low-income consumer is feeling under pressure given the collective impact of inflation over the last few years. So it's a combination of all of those factors that are contributing to this potpourri of uncertainty in the consumer environment. With that being said, most households will want to celebrate the holidays. They're going to want to be gifting for others and for themselves, and that should create a decent foundation for retail.
You cover a lot of the big box retailers: Home Depot, Lowe's, Target, Walmart, Best Buy, Costco. Where are the winners and losers in these brands that you cover?
Yeah, it's remarkable. Over the last 2 years, 50% of all retail sales growth in the United States has been driven by a combination of Walmart, Costco, and Amazon.
And how many years over the
last 2 years? So think about your
Before that, it was even more. I'm going back to the pandemic.
Yeah, well, it's wavered over time, but it's been very concentrated. Think about your own experience, how much you are consolidating your spend amongst fewer players. They're just making it very convenient.
Is it the technology?
Technology, yeah. Being able to press a button, have the immediacy of the speed of delivery, extensive assortments. They are playing into all of this that is allowing them to gain a disproportionate amount of share. There are also some cyclical factors, like we haven't been as interested in spending on our home and some of those other categories. So mass merchants have benefited as a result, but they're just crushing it. They're the winners.
Yesterday, we heard the announcement of OpenAI and Walmart and that kind of partnership where you can, through ChatGPT, go ahead and order some of the items that are there. It's not just Walmart. There were some other retailers, too, but Walmart was the one that really took the headlines. Yeah,
without a doubt. And here's the way to think about it. A lot of traditional retailers were so fearful of creative destruction when e-commerce came to be that they missed it. They allowed some of these new emerging models to develop right under their eyes. They are applying that lesson and do not want to miss agentic commerce. So you will see more of those types of announcements that Walmart made yesterday. It is an early adopter. It's putting all of its products available on ChatGPT. and we think there'll be more of that.
What was the gain in the stock yesterday? Was it?
It was about $40 billion.
In market cap.
That's exactly right.
Is it worth it from your perspective? Is that a fair assessment from the market?
Walmart is on its front foot right now. It's advancing its business model in the last couple of years in ways that it had taken decades before, between advertising, its third-party marketplace, data monetization. It's fundamentally a different business today. So as it shows more progress with developing into even newer areas like agentic commerce, the market's going to be willing to reward it. So I think absolutely this is going to be a very uncertain time. The market's going to act first, think second, but in this case, I think the market has it right.
You said data monetization. That's Jasmine. La Boo Boo. Oh, okay. La Boo Boo. Sounds like what happens when a French kid scrapes their knee. What do we got? My wife will be coming home today. I haven't cleaned or done any of the dishes. Now she'll see that I can't live without her. I'm romantic like that. Oh, Candyman. What will we do without you, brother? What will we do without you? I love it, man. I'm auditioning for the new James Bond movie. I should just get the part, to be honest with you. Pico says, Rob, we're getting closer to greatness. Let's go. Absolutely. Okay, what else do we have? Getting close to our time limit here, guys. Holy smokes. Okay, so Ripple CEO Brad Garlinghouse heavily criticizes Wall Street. Quote, now they are coming to us. Let's talk about it. Ripple Lab CEO Brad Garlinghouse slammed Wall Street with a Macho Man elbow drop. Too hot to handle, too cold to hold. Yeah. Opposing crypto companies more direct access to the Federal Reserve System. Garlinghouse specifically said that the resistance to crypto firms obtaining a Fed master account is hypocritical and anti-competitive. Well, he's absolutely right. Speaking at the DC FinTech Week event, Garlinghouse stated that the crypto sector should be held to the same standards as traditional financial institutions when it comes to combating money laundering and illicit finance, adding, if we're talking about the same standards, we should also have access to the same infrastructure. It's inconsistent to say one thing and oppose the other. He's got a point, guys. He's got a point. The Fed's master account system allows institutions to directly integrate with the U.S. financial system and access central bank systems. However, many cryptocurrency companies have struggled due to the Fed's reluctance to approve such accounts or uncertainty about how the process will work. Ripple recently applied for a master account, though its subsidiary Standard Custody and Trust Co. The company also sought a federal bank license from the U.S. Office of Comptroller of the Currency in July. Garlinghouse stated that they have recently held more constructive discussions with banks regarding Ripple's stablecoin project, RLUSD. Quote, I had a meeting yesterday in New York with banks that refused to talk to us 3 years ago. Now they're asking, how can we collaborate on this? Funny how that works. Ripple CEO argued that granting crypto firms a master account would provide a greater stability, oversight to risk management in the financial systems. It's really disappointing that some traditional banks are lobbying against this, he said. Yes, it's not a surprise, but banks are starting to see the forest through the trees. So, and then we have this. Bitcoin flash crash called temporary by Bitwise CEO. Bitwise Chief Investment Officer Matt Hogan says the recent crypto market flash crash was a temporary event rather than a structural problem. He argued that leverage, not fundamentals, drove last week's record $20 billion liquidations with no lasting damage to crypto core outlook. The turmoil began late Friday after President Trump posted on Truth Social. We already know what happened there. Bitcoin fell 15% towards $100,000 on some exchanges, and it's at its worst point. While Ethereum dropped over 20% and Solana plunged 40%, however, By Monday morning, Bitcoin recovered around $115,000 after Trump seemingly attempted to de-escalate tensions, returning near the level before his initial post. In a note to clients late Tuesday, Hogan said crypto rebounded quickly because nothing fundamental to its outlook had changed. He outlined 3 key questions. The episode prompted, whether any major player collapsed, how the technology held up, and how investors reacted to the volatility. After speaking with Bitwise partners, ranging from custodians to liquidity providers, Hogan noted that losses appeared contained to individual traders rather than large institutions or service providers. Firms experienced losses but appear to have all survived, which helped the market recover quickly, he wrote. On the technology front, Hogan said blockchains themselves performed well under stress. Decentralized platforms like Uniswap, Hyperliquid, and AVAIL ran smoothly, though some criticized some centralized venues had issues, giving crypto a passing grade overall, handling the volatility. Yes, but exchanges like Coinbase froze your ability to trade, just like I've been warning you guys that they will do every single time there is volatility in the market. But people still don't believe me. The third signal comes from Hogan's inbox, where he received minimal contact from professional investors despite media inquiries spiking. He wrote that when investors are truly panicked, his communications explode, but in this case, it was crickets, suggesting the sell-off did not shake out long-term confidence. So if you are a small retail investor, which we all are, myself included, if you were emotional about it and shook out and panicking, well, guess what? Institutions did not feel the same way as you and they were buying. So what does that tell you? Maybe it's your emotions that are the problem. You should be doing the same thing that the institutions are doing. They didn't become multi-billionaires and multi-billionaire companies by being stupid when it came to money, not financial advice. Hogan concluded that the financial crash will not be any lasting consequences. The long-term drivers of crypto growth, including regulatory progress, institutional adoption, and continued disruption of traditional markets, remain intact despite short-term jitters in the market. He noted that market makers and liquidity providers typically pull back for a few days following big volatility events. The lack of liquidity can lead to exaggerated moves, either to the up or downside, but over time, Hogan says he expects the market will catch its breath. Yes, I agree. It's a lot of emotion in it right now, guys, but the people who can control themselves are the ones that are going to succeed in this space. The market is at risk of a 5 to 10% drawdown, says RBC's Lori Calvicina. Anyway, I'm not even going to try to say her name.
Positive territory this morning. Join us now for a look at the markets. Lori Calvicina, she is RBC's Capital Markets Head of U.S. Equity Research. Good morning.
Good morning.
And the question that I would ask you is, what do we do in this sort of topsy-turvy world of both? We're getting all these earnings reports, but I can't tell whether I'm supposed to focus on that or focus on what Trump is saying about tariffs in China.
So I think, unfortunately, we have to deal with both right now. I've been running all over the place the last few weeks, and I will tell you, I was in London for a bit, up and down the East Coast. There's a lot of things that investors are worried about right now. Not a single person over the last 3 weeks mentioned to me an escalation of the China-U.S. trade war. Just wasn't on anybody's bingo card, and we're sitting at peak valuations. So when you get those unexpected bits of bad news, rather, it does take a bit of a toll. That being said, I think we're seeing valuation multiples stuck at peak levels from the last 10 years. They're not going up, they're not going down. This is an earnings-driven market, and I think where this market goes from here is going to depend on the composition of earnings the next few weeks.
And what are you expecting in that regard?
So, it's lumpy by sector, to be honest. And we're starting out with financials. I've told people enjoy it. I'm overweight financials. I like this sector. They've been very, very resilient on earnings sentiment. We've generally seen a deceleration in the rate of upward revisions across the board. Financials has been one of the exceptions to that rule. It's come in a little bit, but not a lot. Tech has been another. And I will tell you, tech, the top 10 market cap names, the AI trade, that's where the earnings strength, that's where the earnings resilience is. There's a lot of jitters as to whether or not that's going to endure. And then you look outside of that, the tariff-related sectors, industrials, materials, earnings revisions are falling, margin expectations are falling. Companies are managing through very well, but they're getting some bumps and bruises. So we don't expect a ton of resilience out of that latter part of the market. We like the financials, and I think tech is the wild card.
What do you think about small caps right now?
I feel like I'm screaming into the abyss on this one. Everybody loves them. I'm an old small cap strategist, spent 7 years of my career covering them, still talk to a lot of small cap PMs.
Yeah.
If you talk to the small cap PMs right now, they're frustrated because
LA
while there
Night.
has been a burst of outperformance that we really saw start around Jackson Hole, it's a very low quality composition. So most of them are underperforming their benchmarks. It's a weird kind of surge that we're having in here. I think that what's essentially happened is that the hedge fund community did what they always do, is put on some rate cut bets, and now we've basically got the cuts priced in, and we've seen this trade fizzle out a number of times since 2023. I think it's going to fizzle out again, or at least is at risk of it, because you're seeing jobs growth decelerating. ISM is stuck in a rut. Generally, you need to see those things moving up for small caps to outperform. Not just a good economy, but a hot economy. Or you can break the economy and have a good one coming out of the recession. But a 1% to 2% GDP backdrop with decelerating jobs growth, small caps don't normally do well then.
Okay, so then layer on top of that then the tariff issue, which is how do you even model that into the situation? Do you take the position, I think as some investors do, that China and the U.S. will somehow work this out and that it won't be a terrible situation? Do you take the position on the extreme end that it's going to be a horrific situation?
I feel like I'm middle of the road on this one as well. I keep thinking back to a lot of the commentary I heard at the beginning of the year, sort of a transition period, short-term pain for longer-term gain. I think companies are doing a beautiful job of managing through, but I don't think they're superheroes. And I think there are some realities on the ground they have to contend with. And I think what's bothered me about markets is kind of in June and July, we went from the conversation with investors going from, well, we paid the price to economic ripple effects from the tariffs to, oh, there aren't going to be any economic ripple effects. And I like that word ripple effect because I think that it is survivable. I don't think it's a disaster. But I do think that, we've got some upward inflationary impacts. I think that there's going to be some messiness on demand. Margin expectations, again, they came down between June and Labor Day for all of the tariff-related sectors, healthcare, industrials, materials, consumer discretionary. Those are just some realities we have to work through. So I like stocks next year, but I think there needs to be a short-term period of digestion.
Digestion meaning that the market is going to correct?
I think that we have, the risk of a 5 to 10% drawdown, and frankly, probably closer to 5 than 10, but something in kind of the 6,100 to 6,400.
And okay, so if 10% is your low or your negative case, what's the upside?
The upside, I think if I go back and look at some of our sentiment work, our cross-asset work, they were pointing to kind of like 6,500 as the sort of the top end of where we deserve to be. And you can always overshoot that. And in fact, we have this year. But I think
there is no upside is what I think you're saying.
I think the risks are a little bit more skewed to the downside in the short term. But I do think that once we get into next year and we've worked through some of these issues and we get better visibility on longer term earnings, then I think that we can move higher. But I think we've got some work to do first.
Okay.
So much speculation on which direction markets are going to move. Are we going to see a bear market in 2026 across all asset classes, or a bull market? A lot of questions, guys. A lot of questions. So for now, Bitcoin holding strong, $111,233. We'll see where we close this day. Can we get back above support at 112,565? That's what we're watching for, guys. I have some coaching calls to get to over on the Patreon. I will be dropping a trading video over there today as well. You're not going to want to miss that one, guys. If you're not part of our trading group, get over there. It is less than the price of a cup of coffee a day, and we've been knocking it out of the park. Everybody in our trading group paid off their price of a cup of coffee a long time ago, and now they're just making profits, right? So check it out today, guys. The link is down below for that. All of our training courses as well are free to our Patreon members. You get all the education that you need. So join today anyway. Like I said, it's less than the price of a cup of coffee. Book your one-on-one coaching calls or join one of our group coaching calls today. The link is down below. You can check out the QR code in the top right-hand corner of your screen. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.